Well, good morning, everyone. Welcome to our Tuesday morning trading session. You'll have to excuse my voice. I'm a little bit trying to fight off a cold. I'm hoping not to cough in anybody's ear. Okay, we just had the opening bell. For those of you new to the room this morning, welcome. What you're looking at is the diversified trading system, and here in the top left I have the Hawk Scalper. Top right, Falcon Swing Trader. Bottom left, Eagle Trend Trader. And the bottom right, the Raptor. This is the NASDAQ on this particular monitor. On my other monitor, I'm also watching soybeans and crude oil. So the market just opened up. We had a little bit of a move to the downside. Looks like here in the NASDAQ, not a whole lot from the overnight session. Here was a trend change signal that came in the wee hours, and the market's fallen off. This is going to look like a bit of an opening gap relative to where the market left off. So the market closed somewhere around here yesterday, around 44.77. And so now the open down here around 44.61.62 is going to make this look like a gap. And that's significant because a lot of times the market will try to get into that gap out of the open. And it does seem like Tuesday's open is more like Monday's open should have been. We had a run down, now we're getting a little bit of a run up. Soybeans also spiked and are now falling off. That's typically what you expect during an opening session. But we'll give them a few minutes here to sort themselves out. I do believe that this first hawk signal did reach our profit target. Oh, let's see here. I'm currently set on a runner. Yes, it did. Okay, working into a little bit of a macro pullback signal. I'm going to shoot a trend line across the top here. Let's take a look at the eagle for a larger overview. It looks as though we might be making a test of the extreme here before we get a possible failure. But, you know, I think everybody's been looking for some sort of retracement in the stock indices for so long, and we're just not getting one. See, Trade Forecaster is saying we're in scalp mode actually for about another 20 minutes, so that would make sense. Then we're going to go into about trend mode. Opening range will probably last us about another 20 minutes. Here's an opportunity for a macro pullback signal, and I think I can take it. Oh, here, let me readjust that. I'm just going to throw a onesie on this one and try to cover it above the trend line. See if we get a little move lower here. No, not yet. Okay, I can readjust this now to take advantage of the trend line. If we're going to see a trend line reaction here. And yes, this is a little early, but yesterday the market took off on me right out of the gate, and now we're into yellow bars, so I'm going to scrub that order. You see here on the Eagle, we're getting a conflicting signal. We're getting a red bar buy on the Eagle, which we know to be a fairly reliable signal. Now let me see what that's going to cost. If I cover it below the low, oh, come back here a little bit. So what I'm trying to do here is trying to take advantage of a second push on the entry. I've seen more or less where this bar is prepared to go at the moment. And I've got my stop below this swing low. And it looks as though they may try to climb and get into this gap, which should see them trade up around 44.77, 78, maybe 80. Crude oil looking a touch sideways here on the hawk. We are getting a sell signal. This would have been our first micro-macro cross signal here. Did that reach our profit target? Yes, just hit our high probability target and then reversed. These are a little bit more difficult to take because this right here, this could be our test of the extreme. Right? That could be a retest of these lows. So if this market is failing and setting up to head higher, that would probably be the place it's going to do it from. We'll put that away for now. Okay, so our Eagle trade, we're going to close that one up. Now we're coming back with a with trend signal. We've got the warning dot. Well, we had a with trend signal here on the Raptor also. We'll see whether that gives us another chance to get in. All right, so here we are with another first micro macro cross signal. It's toward the bottom end of this trading range, however. It's too bad this one went into yellow bars. It would have been a nice place to sell from. And this arrow right here, this bar was just a tick short of making this a 4-arrow consolidation. I will take a 4-arrow consolidation off of a yellow bar. It's the only hawk signal that I will trade on a yellow bar. Well, they don't like that 4460 area, that's for sure. Seeing a little bit of a reaction there. Okay, crude oil and the NASDAQ are giving us a similar look here on our Hawk tools. Here's crude oil. It's come down off of that first micro-macro cross, and now it's stalled. So it seems like we're below this trading range that formed here. I would expect prices to perhaps continue a little bit lower, but maybe what I would do is I would enter below those lows. That would allow me to cover on the highs. And if you wanted, you could try to throw a runner in here also. Let's see how that would work. So not a bad looking trade for crude oil if the market breaks down below there. Here on the NASDAQ, we're getting a similar signal now on the Falcon. It's essentially a trend change signal, but rather than take it right here, we know that for a few ticks more, we can take it below the low, which would be a safer entry. So we'll keep an eye on those two trades for a moment. In crude oil, this whole 49.50, 49.60 area seems to be a little bit of a problem spot, which is why I delayed the entry. And same thing here for the NQ. You know, the market came down 44.60, 44.61, 62. Big run down, put the brakes on, tried to come down again, put the brakes on, which is why I'm not all that keen to get in here too quickly. We'll see if this develops into a macro pullback or perhaps a four-arrow consolidation. That might give us a better opportunity. Soybeans, very strong out of the gate. Here is the eagle on the soybean market right here, right out of the open. We had a with trend signal, and that's probably already generated about $400 or $500 in open profit. You can see yesterday was an outstanding day for soybeans. Just a fantastic move lower. Okay, so the NQ is falling off. I'm going to cancel the crude oil trade at the moment. And you can see we had comparable signals here in the Raptor to match what we were seeing in the Falcon. We had this nice signal right here. So what we can do here, if we wanted, I've just got a single on here because what I was going to do is I was going to try to build the position. So now that we know where the market has stalled, we can add another position to that. So our initial entry is right here. Our next entry is going to be right there. Providing, of course, we don't get stopped out on this pullback. Pretty tempted to bring this trade to break even just because. All right, we're going to do that. Force the seller's hand. So now we're essentially playing with their money. Okay, the crude oil hawk chart has drifted into yellow bars. If you remember, this is the one that we were considering selling below the lows, which the signal was printing right here at the time. It's since retreated and now is moving into yellow bars. Well, why is that significant? Well, you can see we had a green bar sell here. If we work this into another green bar sell signal, we typically only see 2 green bar sells within a trend. So that would make me very suspect that crude oil has much left to the downside. And in fact, we might start to see prices get a little bit stronger, might put in a little bit of a rally. Well, thanks, Jim. Jim says the advanced decline is very lopsided to the downside, which confirms what we're seeing here, and that the ticks are reading negative 1100, which is huge. Now, a lot of times you'll actually see the market fade against a strong tick like that. And by fade, we're talking going the opposite direction, of course. All right, so the I might go with a more aggressive strategy now. Because the sellers have shown me that there is some selling here. The buyer is obviously still very strong down here around the 44.53 area. So I have this market pinched a little bit. And I'm not prepared to give them too much wiggle room. All right. We'll put that one on the shelf. The trade manager is looking after that. So people often ask, what's better to do? Is it better to trail a stop, or is it better to go all in, all out? Well, you can see here's an instance where had we gone all in, all out, we certainly would have done a little better for ourselves, especially if I used my position sizing. So I got in here, covered up here. See, $300 versus $40. Of course, the other side of the equation was I only had $130 initial risk, whereas here I have $400 initial risk. But that is an amount that is appropriate for my account. I was halfway thinking we might see another run today, either higher or lower, and that might give me an opportunity to scale into a position, add my contracts as I go. Soybeans flashing us a late filter entry signal, just the beginnings of it. Trend line has not changed color. Filter has gone out of sync. We're getting a warning dot, or we have a warning dot. We might be printing the rest of the signal actually right here. What we would want to do is we'd want to wait for that filter to come back into sync, which if this bar closes low, it will certainly do that. Now this is one where, because soybeans are one of these instruments that trade at 12.50 a tick, a onesie might be in order. And maybe add to your position, maybe start with a runner. All right, so now everything is in sync again. We do have our late filter entry. The safer entry is below the low. All right, we'll put that up on the shelf. Mm. Jim says the YM is lagging, which is a little unusual. The E-mini uh, really lit up the market. The NQ to a lesser extent. Jim says the mid-cap is hustling pretty good too. That is one disadvantage with the mini Dow, is that it can be a little bit more subdued than some of the other markets. Okay, the Falcon now starting to turn over a little bit. You can see we're getting a green trend line forming. Sometimes I like to see how the trend line looks on the other side to see if the market is channeling, because what happens is if you draw, like in this instance, there's not enough reactions here to draw an accurate channel, but so what you need to do is take the top end of the channel and move it down to the bottom. And what you look for if you have a channel like this is if the market overshoots the channel or if it comes up short of the channel, which you see it's a little bit shallow here, not drastically shallow. But what that would tell you is that the market is starting to lose some of its momentum uh, to the downside, possibly. Same thing if it overshoots. If it overshoots, it's like it tried too hard, it's ran itself out, and now it's going to go the other direction. That's why sometimes I'll suggest connecting what I call connecting the dots, but on the instead of in a downtrend connecting the trend line across the top, connect it across the bottom. And you get a pretty good idea when the market might be starting to turn around. Like if the market comes down now and makes a swing here, and all of a sudden you start connecting there, it's like, oh, this doesn't look like a downtrend anymore, does it? So sometimes helpful visual. Okay, we were working on a 4-arrow consolidation here, but you can see we've drifted into yellow bars and now into green bars. So unless we get a green bar sell, this does not look very inviting. Crude oil flopping around a little bit, possibly working itself into a trend change also. Here is the Falcon on crude oil. We have the beginnings of a trend change signal. So here's our up, here's our down. Our trend line and filter have already changed color. We'll see if they come back with a buy signal there. Thanks for the play-by-play, Jim. Jim's giving me the advanced decline numbers. Advance 900, decline 1900. So they're about a negative 1,000 on the advanced decline. That's fairly bearish. But the thing you need to remember with things like advanced decline numbers, with things like ticks or VIX or any of these other indicators is that it's all relative, right? It's relative to where they start, where they're going. It's like if they're negative 400 and they drop to a negative 1,000, yes, that's bearish. But if they're negative 1,000 and they go negative 800, yes, that's still bearish, but relative to the negative 1,000, that's actually getting a little bit bullish. That's why I have a hard time with reports as well. People always, well, not always, but people occasionally ask me, do you read inventory reports? Like, do you follow how many millions of bushels of grain are being harvested, or the plantings, or the crude oil inventory and stuff like that? And no, I don't, because it's all relative, right? If the market is expecting crude inventories of, I don't know, I'm picking a number, 100 million barrels, and that the market has already reacted expecting that. Well, if the inventory report comes out 85 million barrels, well, that's still, bullish or bearish, however, but the market would interpret it relative to what it was expecting. Speaking of crude oil, it's getting a little bit warmer toward our possible trend change. Oh, it was flashing a green bar here for a second. There we go. We'll see whether that actually builds into a signal. That would give us a bounce off of primary support. It would not be unreasonable to expect a rally near the primary resistance, which could see it trade up to 50.40. That'd be a nice little move. Okay, the NQ coming into the hard edge on the Eagle now and the Raptor. We are working on a little bit of a trend change signal here. My concern is the test of the extreme. Did that occur down here and we're safe to buy, or are we going to see another reaction? This one is not quite as clear cut as what we saw here. You know, that was a decent test of the extreme. The market comes down, gives us a sell signal. Okay, we're good to sell. But the way we are now, it's not quite as clear what the market intention might be. I would very much like to see a turn here and head a little lower, and then watch the buyers come back. That would take a lot of pressure off. Yeah, thanks, Jim. Jim says the stock indices and the NQ right in the middle of the 10 a.m. high-low. Let's take a look here at the Raptor, where Jim's been so kind as to give us his indicator to use. You can pick this up at the NinjaTrader website. They have a whole host of indicators, but this one plots the market open to the first half hour. So essentially the high and low of the opening range. And you can see Jim's right, we're trading right in the heart of that. Peter. Good morning, Peter. Peter writes, good morning, Eric. I've used other indicators on top of the DTS birds, which is actually, by the way, something that you can do with DTS is that it will complement other tools. But Peter writes, I found that the other indicators match or lag the DTS birds, so I just stick to the birds. Price action is everything, and I would agree with you 100% on that, Peter. As most of you know, I'm a big one for trying to keep things simple. Keep things simple as possible. Okay, I don't know how aggressive you guys want to be on crude oil, but it looks like here on the Hawk, we're getting a red bar buy. Now, this red bar buy, coincidentally, looks like it could be coming off of a test of the extreme. So you see this little hiccup here, right? The market has come down, seems to be failing, and might be getting ready to head higher. Now, the safer place to buy is up here. This is obviously a little bit of a more aggressive posture on this trade. I'm assuming that this low is the test of the extreme. A lot of times what I like to do with these red bar buys or green bar sells is to cover below here, but I have a feeling that with crude oil, that's going to be a little bit too expensive. Oh no, I could still manage it. I am only in with a onesie. And what that enables me to do is cover below the low. If the market reverses and tries to head a little bit lower from here, then I can wait for the buyers to once again come back and show me that they're serious about buying the market, and then I can become more aggressive with my stops. if you are, what I'm doing today is I'm scaling into positions. If you're doing that type of thing also, typically you have a runner in play, and we find levels at which to add additional contracts. So the obvious place to add would be above this swing high. Now, if this order gets filled here, of course, I'm bringing all my stops to break even, in which case I'm going to have, it looks like $160 in open risk. So that's where I entered. That's where the second entry would be. So like I said, a little bit more of an aggressive posture on this particular trade. Ooh, the Falcon on crude oil has come back with that late filter entry signal. So it's confirming what we're seeing. I'm already long on the hawk, so I'm not going to duplicate the order here. But it does look like crude oil prices might be in for a little bit of a push to the upside. We'll see. And remember, at the end of the day, everything is relative, right? There are no right or wrongs in trading. If $240 is a lot of money to you, then you take the $240. Like, it's your money, right? All right, so we'll get that to break even. Actually, we'll go break even +1. And, if this were another market besides crude oil, you could even look at entering above this swing high also, which looks like it's going to turn into our first micro-macro cross signal. And I think my stop is in the wrong spot. I think my stop's supposed to be down there. I have a tendency to be a little bit more aggressive with my stops also on these types of trades where I'm scaling into positions. All right, we'll put that one on the shelf for now. Okay, the Falcon here on the NQ looking very attractive for a late filter entry. We are still expecting the NQ to give us one more push to the downside. The fact that this market has moved now into a red bar off of this setup makes it a little bit more inviting to enter above the high. So if I enter above the high there, only two more ticks to go above the high, this little swing high. So I think I'll set up to take that. At the very least, we should see a move here to the primary support, maybe even up here to the median line. We'll see. A little bit of a conflict in the signals at the moment. You can see we're getting a reaction to the hard edge here on the eagle. The eagle's actually giving us a sell signal, and we're looking bullish on the falcon and mildly bullish on the hawk. So with this falcon trade, or pardon me, this eagle trade, the signal's printing right here. We have had a little bit of a pullback. You could use the ATR line to cover your trade, or pardon me, to filter your trade. You can see we're working on another sell signal here, the bottom of which is going to print right at the ATR line, and that's going to actually generate a signal which is in sync. Okay, our crude oil trade getting a little bit more aggressive here. I'm going to enable the stops now so that we start covering some of this open profit. And remember, don't let these numbers get away from you. Like if $300 is an attractive number to you, don't be afraid to close out that trade or to throw in a limit order somewhere. You know, you can, we're in with two contracts. Let's say we wanted to take, we were expecting some sort of reaction around 50.10, I think we were looking. So throw in a sell order. If it hits 50.10, we'll peel off part of the position. Okay, so we can cancel our Falcon order. Come on, NQ, let's go. So they're fighting these lows that we saw from this morning. Those would be this morning's lows where the market came down, found some buying support, came up, sellers stepped in a little early, started to force the market somewhat. So we're seeing the buyers step up here again. And now we'll see whether or not the sellers are going to overwhelm them and have the buyers walk away or not. The NQ might be leading the charge. Jim says it's the only one, the NQ is the only one testing the 10 a.m. low. The stock market not following just yet. Dan's asking about taking partial orders on using the Trailblazer, if that's possible. Yes. Okay, so Dan is asking, is there a way to exit partial order on Trade Manager or Trailblazer with a market order, or do you have to place a limit? With Trade Manager, you can offset the stops. How about with Trailblazer? Yes, you can. Well, here, let's go to the crude oil trade before it disappears. So you can set a limit order, or if I wanted to take part of this position off, let's say I'm going to take one out of the market, just make sure that your quantity is set there at 1. We're currently long, so I need to sell 1 to offset. See what it did? It took profit right on market and changed everything now to a quantity of 1. And alternatively, you can right-click on your chart and you can place limit orders. And the same would be true for Trailblazer. If I were in Trailblazer, and providing I had more than one contract in play, I could either use the buy market, sell market buttons to exit, or I can place a limit order as a profit target. All right, there goes the NQ. Hooray. Okay, give me a little bit of breathing room here. I'm going to start bringing the stops in. See, this candle here had a very tiny wick. If it had a bigger wick, like one of these, it would be easier to roll the stops in above it. Because this shows some very aggressive buying and then very aggressive selling. This shows, well, some buying and selling also, but come on, you guys. There must be some profit taking going on in the NQ soon, for crying out loud. The daily charts, it's just taken off like a rocket. Every time it pauses, it goes higher still. All right, here come those darn buyers again. It's kind of encouraging to see a first micro-macro cross here on the Hawk and a possible trend change signal building here on the Falcon. So everything a little bit more in sync. I shot a trend line across the top of the crude oil market here on the Eagle. You can see we're still flirting with that 50-10 area that we were looking at. Oh, looks like they're just about to tag that. We got stopped here on this reversal, but that's all right. We still took $350 out of the market, so I'm hardly disappointed. But I'd be curious to see whether or not they can make a push up to that trend line today. That would be a very large move in crude oil. I don't think it's going to come without a fight, though. You can see we're into that hard edge on the Eagle now, and you can normally anticipate some sort of reaction when you get up there. Okay, so this bar looking a little bit more cooperative, probably a good bar to roll my stops in above, and I like the bar high-low when I'm more aggressive on the market like this. So I've moved the trade to break even now. There might still be a little bit of a reaction here, but at least we're in a position now where it's not going to cost us anything. Well, cost us anything. We do have open profit or unrealized profit, however you want to view that. But it does make it a little bit easier on the nerves when you're at least in a break-even position. First micro macro cross here that we were watching unfold, that one definitely hit its first profit target if you were going all in, all out. Which actually, you know, with the hawk, sometimes I think is the best strategy. I really do. Just take your $50 targets. You wouldn't even have to go in this heavy, right? You wouldn't have to go in for $500. You could dial down your risk a little bit. So long as, if you're still scalping 150 dollars on a scalp like that, nothing wrong with that whatsoever. Oh, they did back up enough to find the break-even tag. So, um, what I do now in my journal, I will make a note and see if this trade had worked better had I run a looser stop. So had I stayed with the ATR or left my stop a little bit further back, would that have held me in the trade long enough, or was it better that I took the lumps early, got out of the trade quickly? Still posted a positive number. It's not huge, but it'll at least cover the costs of the trades, right? Better than posting a negative number. And yes, I realize it's not a big enough number to live on. It's barely a big enough number to go buy lunch, but it's all a numbers game, right? If you find yourself doing this consistently day in and day out, if you can do this for a month, or better yet, 2 months, then it not only builds your confidence, but it quite literally becomes a numbers game. So instead of going in and you're still leveraging or scaling in your position, instead of going in with a onesie, then you start going in with two contracts. And remember, there's absolutely nothing wrong with going into risk mode. It can be a little bit more uncomfortable. It does, I agree, it does depend on your account size, I think. If you're a smaller trader, and by smaller, I'm probably referring to the people trading $10,000 accounts or less, you might be more comfortable going in in the manual mode, just tossing in a onesie, because this amount here, this $100, is probably a palatable amount, and it won't be too far out of line with what your risk on your account is anyhow. So actually, come to think of it, if you're trading a $10,000 account and you've dialed down your risk to 1%, you're only going to be able to trade $100 risk anyhow. You may have to dial it to 2 or even 1.5%, somewhere in there. That will still only get you in with a onesie, but you're always going to protect your risk exposure. Because I'm trading a larger account here, I'm going to manual mode when I only want to scale into a position. Just go in with those one lots. Okay, the trend line keeps needing adjustment. Take a look at this, folks. Almost there. Another bar and a half. See, now here too, you can't, we had our hawk trade. I got stopped somewhere, I think on the tail of this bar here. Had we been able to hold in, we'd currently be up a good $700, maybe $800 in open profit. And I took 350. You can't beat yourself up when you do something like that. I know people who get very upset with themselves because they exited a trade too early, only to see the market move higher still. And, all the time they're saying, I knew it was going to go up here. Why was I so stupid? Why didn't I run a looser stop and hang in a little bit longer? Well, the fact of the matter is you never really know, right? When we encountered this hard edge, we were expecting some sort of reaction. Okay, so I chose to get more aggressive with my stop, protect more open profit. Was I wrong doing that? No, absolutely not. There was no way to know the market would not turn tail, come all the way down here, give me a wild test of the extreme, and then go higher. There is no way to know that. So don't beat yourself up if the market, goes higher without you. My cousin likes to trade that way. He doesn't actually trade, but he likes looking at charts. He likes saying, whoa, Eric, if we had bought down here and sold up here, and I like to remind him that there is no way, because I know him, or actually here, let's do this. This is better. If we had bought down here, we bought way down here and sold up here, that what a fantastic move that was. And yes, it was an outstanding move. But I know for a fact there is no way on earth he would be able to stand the drawdown on a move like this. From here to here, you're probably, what is that, 48.50 to 50 even. That's a good $2,500 in open profit, and you're going to let the market peel against you about $2,000, $2,200? No. So it's the same sort of thing. So long as you have reasons for taking your trades or doing what you're doing other than panic. If you're panicking on a trade, okay, then that's different. Then you need to think a little bit more about what you're doing. But if you have a reason for doing what you're doing and you happen to get stopped out a little bit early, don't beat yourself up for it. Oh, this is enticing. We're getting a little bit of a green bar sell going on here. I'm a little bit late on it now, but I took too long explaining the don't beat yourself up thing. But let's see if we get the test of the extreme on this bar. Like Jim says, you'd be puking in your shoes if you suffered a drawdown like that. I always liked how Ray Burke said, trading the left side of the chart is easy, right? Trading this part of the chart over here, that's very easy. Trading the right side of the chart, not so much. I always thought that's classic Ray. I know it's only Tuesday, but just a reminder, next week, for the first few sessions of next week, Monday, Tuesday, Wednesday, we're going to have to cut them short. I'm only going to be able to do an hour with you in the morning. I'm helping a friend on a project, and unfortunately, I've got to travel down to Victoria to go see him. So we're going to have to cut the room a little bit short the early part of next week. Yeah, like Joe says, trading seems easy after the fact. It always does. That's why you can calmly look at a chart and do market analysis after the fact. And there is stuff to be learned, like you look at things like these trend lines and you can see the reactions to the trend lines. The thing that bothers me about this particular trend line is that it keeps shifting. So you don't mind shifting the trend line a little bit, but when you're continually shifting it, that tells you that things are starting to lose their momentum. Remember how I told you you can shoot trend lines on the bottom as well? And you see how it's starting to come up a little bit shallow right here. That's an indication that this market is getting a little bit weaker. Not that we didn't know it already. We have our green bar sell. We're looking for our test to the extreme. That would pretty much confirm that that we're done. So it's still struggling, but there is room here. You see, this makes a nicer green bar sell because there was no reaction on the way up here, right? So it's not unreasonable to expect the market to come down a little ways, give us something resembling a test of the extreme, and you could certainly become more aggressive with your stops here. Try to lessen the risk a little bit, at least a few dollars. And here they go. Come on. There you go. So a nice little scalp on a fair, relatively high probability trade. And so now that we've hit our profit objective, um, it's likely to see the market start turning over. And if it does turn over, right, if we connected the bottom end of our valleys, oops, if in fact it is going to start swinging here, well then, hey, all of a sudden it becomes a little bit more obvious that, yeah, this might be an actual change in trend. pretty good session for the most part. You can see here on the Raptor, we're hovering around these 10 a.m. lows, around 44.53 half right there. So the market broke through, gave us some buying here around, let it slip as low as 44.48. Buyers recover. Now the sellers are trying to knock it down. If the buyers come back once again, which is what we're expecting, then we could be in for a little bit of a rally. Maybe not a huge rally, but a little bit. And green bar sell had a lot more in it than I thought. Excuse me. Yeah, look at them go. Wow. Okay, they're going to beat up on the 44.48 area here in a second. Well, the soybean trade fell flat shortly after we got into it, but we did I ran a more aggressive stop on the next leg lower, so we shorted on this um, late filter entry signal. So initially the trade was set up like so. And I held the stops until we saw this other swing, and then I became more aggressive with the stops, rolling the stops down. And we just got tagged on this little bit of a reversal here. Which is unfortunate, but you know, if the market isn't prepared to move, then take what little money you have and go your way. Again, it's not like we lost anything on that. That will cover the commissions and fees. So the crude oil trade today, the big earner, and I'm a little disappointed I saw this one too late. Not that I would have necessarily rode it all the way down here, but just because it was a high probability setup. Right, the market made a nice move higher, actually intersected the trend line, which is encouraging, but I knew there had to be a test of the extreme. So nice little progression down. Here we are retesting the lows. We'll see if we get a failure here now. If we do, if we see the buyers rally the market, well, then there will be a very good chance that prices will try to head higher. Now they're just sparring, just trading punches. Yeah, not much going on right now, folks. first micro-macro cross signal. Yes, it's a high probability signal. You're probably wondering, why isn't Eric selling that? Well, you could. Let me shoot that trend line across the bottom again. There's certainly room for the market to get back to the bottom end of this trading range. I don't think I would take it right here on the hash mark. I think I would take it below the low, because it does seem that we are experiencing a little bit more bullish activity. Right? We're starting to shallow out here somewhat. Selling from the top end of this trading range is a little bit easier than selling the middle or bottom end of the trading range. Okay, let's take a look here. Jim's got a question about the Raptor on the NASDAQ. 1018 and 1045, he's saying, do we have two green bar cells? $10.18 and $10.45. You know what, Jim? That's an interesting observation. I've never really looked at it like that. Like, I've always treated the green bars as a buy. But you know what? You might be onto something here. Because it's generating a buy signal. Let me turn this off here for a second. Typically with all the tools, or in particular with the Raptor, we tend to favor the bias of in this case, the band. But we did have a buy signal which failed, right? And the sell signal came right here. Same thing here. We have a buy signal which fails, and then we come back with the with trend sell signal. Let me see if I can find another one. Okay, here we have a sell signal which fails, and we come back with a buy signal. I'm liking it. Buy signal which fails, and we come back with a sell signal. Okay, this one was short-lived, but it still gave you at least one opportunity here to do something with your stops. It would have probably incurred a small loss, but still the principle seems to be holding for the most part. This is not enough of a band. So I think what James is saying is he was more aggressive, or a little bit more aggressive, on the failure of these green bar signals. The green bar signal does tend to be a buy signal, and the red ones, of course, are the sell signals. But that's a very good observation. I like that one a lot. I'm going to make a note of that. Yeah, Jim says he's thinking about selling one and adding on the signal. It might not be a bad idea. I would have to, I'd have to research it a little bit more. So what Jim is suggesting, because I get the feeling that Jim's a little bit more of an aggressive trader. He would say, I'm going to go in with a limit order right here to sell on the hash mark. And you can see it would have worked out outstanding, would have filled it right on the tick or one over. And then he would toss in another sell order when the signal actually printed. See, now it worked out very well in this instance. Not so well had you done that same thing here. So we're printing a buy or a sell signal, in which case Jim might have bought. But you know what? You are in early, right? So you're already up 10 ticks here. So it looks like you would have got about maybe 10, 15 ticks out of that. Oops, sorry, wrong button. Before it started reversing on you. So this is where we're looking here. So buying on the signal, that's easily 10 or 12 ticks. You could have your trade at break even. That is very interesting. I am going to take a look at that a little bit more. I hear it would have worked out well again, right? You get the buy signal in the band. You actually treat it as a sell signal. You're pretty much in near the reversal. Here's a buy signal in the band. This one took a little bit more heat. Here's one you would have got smoked on, but of course nothing is perfect. Not in trading anyway. Here's a sell signal in the band, which you would have treated as a buy. You would have got filled, and then regardless of where your stop was, you would have got taken out, even if you ran your stop to the hard edge. But you would have done okay on this one and that one. You would have done okay on this one too, providing you held your stop deep enough. Not so good on this one. Pretty good on that one. Huh. All right. Well, very good observation. Thank you for sharing that. I will do some research on it. We'll compile some numbers and then go from there. Yeah, James says, I'm thinking on the bar, on the solid bar with volume, then sell. Wait for the next bar to confirm. Yeah, that could be. That could be a decent way to do it also, right? You get the signal rather than buying right there. Wait for the trade to actually begin reversing. Yeah, like I said, I'll do a little bit of research on it too and see what comes of it. Okay, so the NQ, very, very bearish right now. I think that bear day that people have been looking for a while now has finally come about. Oh yeah, look at this go. Very nice. Okay, so a very reliable green bar sell signal right there. And look, are we going to drift and actually get back down to the bottom end of this trading range? Wouldn't that be something? Looks like crude oil is turning over on us from our earlier rally. Just spotted this late filter entry signal here after an attempt to push prices higher after this recent decline. So you can see we've had our test of the extreme, and it looks like crude oil heading lower again. And of course that means that prices at the gas pumps will be coming down also. Oh, the scoundrels, they jacked it 11 cents a liter here yesterday. And of course I need to get some gas. So not real happy about that. It's like a 50-cent a gallon spike. Just because. Just because they can. All right, boys and girls, if you have any questions, please type away. We're going to be closing up the room here in a few minutes. If you are trading this afternoon, well, we got a little bit of an adventure going on. The NQ is shallowing up a little bit again. I think this trend line has been very effective at keeping this market down and showing us where the sellers are prepared to step in. I would not be surprised to see the market rally, get us at least back up here to these highs here around 44, 62, 63, maybe even as high as, what's this, about 44, 70, 72. But that might be the limit of the buyers today. Very much a bear market at the moment. Soybeans, well, soybeans have been pretty content to go sideways most of this session. The move in soybeans came before the market opened, or before I got here anyway. And crude oil, I think we're going to see crude oil head sideways for the rest of the session also. So best opportunity right now does seem to be in the NQ, and oh, look at this, we're printing another green bar sell. Remember, typically we only see two within a trend. Now that's not carved in stone, but it does suggest that there is some weakness. And we're going to close the session out with Joe's question. Joe asked, what is your take on scaling into and scaling out of trades? Well, I think the smaller your account, the easier it is on your nerves to scale into trades. So rather than risk, let's say you're trading a $10,000 account, it's going to be difficult for you to trade more than a one lot and only risk 2%. And yet we know that only trading onesies, it's very hard to make substantial profit. You can see here this morning, You know, I did a onesie here, I got 35 bucks. I did a onesie here, I got 40. Did a onesie on soybeans, I got another 25. The earnings are less, but of course, the upshot is that if the trade had turned out to be a loser, I would have lost less also. I try to encourage you to always trade your risk percent mode. So if you're risking 2% on a $10,000 account, that's $200. If it only allows you a single, well then so be it. It only allows you a single. But, you know, had I traded the risk mode here, I would have looked at taking maybe as much as 10 times this in profit. So rather than $40, I could have actually had $400. Well, okay, that's the kind of income that becomes life-changing. Of course, you need to balance that with your signals. You don't want to be having a $400 winner, then a $500 loser. That's just too hard. So a lot of people find it easier to scale into a position, starting off small. You know, they'll take a trade like this and they'll say, okay, 85 bucks or 100 bucks, I can live with that. And then if the market goes in my favor, I'll add another one down here, because by then I can roll the trade to break even and I'll still only have $100 in open risk, and so on. So, you know, Joe, I think at the end of the day, the only right answer is the right answer for you. If it makes you more comfortable scaling into a trade, then do that. And you know what? I mix it up. Sometimes I'll scale into trades because that's just how I feel about the market at that time. If I'm going in and I'm feeling apprehensive about the market, I'm not sure really what direction it might take, if it's going to turn me around a lot, okay, then I'll go in, I'll scale in. If I get whipped out of a few trades, okay, it's cost me a few $100s, versus if I max myself out every time, it might cost me $1,000. And then there's other times where I just feel confident about the market. It doesn't mean that I know what the market is going to do, but I just feel better about it, and I'll go in with my position size. Or maybe I'll limit my position size. Instead of 2%, I'll limit it to 1%. And same thing with scaling out. You know, I always say, never, if you're posting an open profit, don't be afraid to take that profit. We all have a pain threshold, right? Mine is $500. If I have $500 in open profit, that would hurt for me to see those $500 evaporate. For you, it might be $200. For you, it might be $1,000. But whatever it is, if the market is flashing you that money, take it. Don't be afraid to take it. If it goes on without you, okay, it goes on without you. But there's nothing like banking profit to increase your confidence, to make you feel better about your trading, because hey, it's an expensive hobby, right? There's cheaper things we can do to entertain ourselves. But that would be my take on it. And I think that's a great way to end today's session. You know, like I say, at the end of the day, the only thing that's right is the thing that is right for you. So that's part of the joy of trading, actually, is you get to learn a lot about yourself, your tolerances for adversity, for risk, and so on. And again, it's not that one is better than the other, that I can say to you, you have to do it this way. No, if that's not right for you, then that's not the way you do it. Okay, you guys, be careful. I still think we're going to see a rally here in the stock indices. So I would be mildly bullish, conservatively bearish and mildly bullish. And I'll see you again tomorrow. Oh, tomorrow's the open house day. Yes. So we'll be meeting in the open house room. I'll talk to you then. Bye for now.